Hi, I'm Kristen King from the Investing Channel, and you're watching Smart Money, the show that gives you the inside edge on the bets that the movers and shakers on Wall Street are placing. As markets try to reconcile themselves to a new hard line from authorities in Beijing and a Federal Reserve that seems happy to wait and see when it comes to raising interest rates or cutting QE, corporate insiders have taken the opportunity to cash in more of their shareholdings. Significant insider dealings reported to the SEC since the 22nd of July had a value of approximately $1.24 billion, but just $89.34 million worth of those trades were purchases, meaning that more than $1.1 billion of sales were made by C-suite execs over the previous week. Shareholders with holdings of 10% or greater also lightened the load last week, disposing of $606 million worth of leading U.S. equities. Among the C-suite sellers last week were Snap Inc. CEO Evan Spiegel, who sold $75 million worth of stock in the highly rated social media company. CTO Robert Murphy wasn't far behind, selling $71.7 million worth of Snap stock. Mark Zuckerberg of Facebook continues to sell, and last week he disposed of another $112 million worth of stock in the company he founded. In July alone, he sold Facebook stock with a value of more than $513 million. The insider selling that stood out the most, however, was from another tech company, and it's one that makes its living providing software and integration services to businesses who sell online. The company in question is Zoominfo, not to be confused with the similarly named Zoom Video. Zoominfo came to the market in June 2020 as the country was in the grip of COVID-19. That was a bold decision. However, e-commerce was booming, and a business that made its living selling software that supported and enhanced that trend was always likely to be in demand, and so it proved to be. Not only was Zoominfo able to raise the size and pricing of its IPO, it enjoyed a stunning debut with its shares soaring by more than 60% during day one, closing at $34 compared to the listing price of just $21. That bump in the share price valued the company at $13.4 billion, though that has now climbed to $21.18 billion, with the stock trading around $54 a share. Zoominfo remains highly rated, and it's a textbook example of a growth stock. It sits on a prospective 12-month PE of 536 times earnings, a price-to-sales ratio of 44, and a price-to-book ratio of 22.48 times. Unlike many of its growth peers, however, Zoominfo is profitable and reported profits of $3.2 million in Q1 2021. That equated to earnings of some 13 cents per share, though there were some one-off items in those numbers. Zoominfo will shortly report earnings once more, which makes it all the more interesting to see money coming out of the stock from inside the company. Recent sellers of Zoominfo include CEO Henry Shook, who sold 400,000 shares to raise $19.794 million. Fellow board member Todd Crockett, who is also managing director of longtime Zoominfo investor TA Associates, sold just under 1.1 million shares for a consideration of $58.97 million. Todd Crockett had also sold stock throughout June. The most notable selling, however, came from another long-term investor in Zoominfo in the shape of venture capital firm Carlyle Group and their associates TC Group Cayman Investment Holdings LP. During July, they sold 2.28 million shares between them, which have a value of $118.5 million. Another institutional investor to have taken money off the table is DO Holdings, who sold $25.52 million worth of Zoominfo stock. These sales may be nothing more than long-term investors in the company taking some money out of the business once IPO lockup agreements had expired. Such agreements typically last for 12 months after a listing, but with the stock up by 59% since IPO on such high ratings and with earnings just around the corner, perhaps these insiders have provided us with a marker to suggest that we have seen the best of share price performance in Zoominfo for the time being. That's all we have time for today. Always make sure you do your own due diligence before making any investment decisions.